Hello, and welcome to another MCO market update on FETCH.AI. The price continues to be in an overall downtrend from the March high last year. So it's a correction that's now been lasting for more than a year. And the ABC pattern that we're tracking here could be close to completion. I mean, this has fulfilled all requirements. The C wave is a 5-wave move down. The targets have been reached, but I've activated the next Fibonacci extension levels, next support levels, so that we have the next levels to watch where the price could react, because so far there hasn't been any convincing reaction that would suggest that a low of sorts is in place. So while I have a full ABC structure, the weakness of the entire market sector obviously also makes it difficult for FET to start to recover. Maybe it will do it from this region. I mean, we're approaching key areas, but so far, while we are watching, obviously for reversal, we cannot identify any signals. And what would be needed minimally as a signal that we're starting that fifth wave to the upside? Maybe we don't even get it, but that's why we need some signals. So the first signal would be a break above that 59-cent level. That's the swing high from end of March. Yeah, without a break above that level, I mean, at least to get back into a sequence of higher highs, there is absolutely zero evidence that a low has formed. That's very, very important to understand. The trend is still down, and we could even probably here add a trend line or so that will help us identify when momentum starts to shift. Just trying to identify how we can get most of these touch points, yeah, like this one. And then it's important to recognize that next support is located at 37.6 cents. That's the 78.6 Fibonacci extension. So if we take a look at the standard Fibonacci extension levels, it's calculated based on the decline between September 21 and November 22, and then measured against that swing high. And normally we would say the 78.6 is not so relevant, but it is still another one to watch because the distance to 30 cents is quite far. So I thought it makes sense to maybe add another level. I don't know if it's going to be meaningful, probably not. The 30-cent level is I think the more meaningful one for this ABC structure to the downside, because that's really based on a calculation for a C wave target. Yeah, and the C wave should reach this area next around 30 cents. So anyway, 37, 30 cents, pay attention to these levels. Either way, there is no low in place. We're still in the downtrend, and you could use the trend line potentially to continue to focus on lower prices. I know that some of you are short. I saw that in the comments in the last video. And I can only say that once we break above this trend line, that could be an indication that we're getting back into an uptrend, but it's not a solid signal because trend lines provide a lot of fake signals. So maybe a break above the last high is needed to get back into that sequence of higher highs and higher lows. Unfortunately, not much more to say. The yellow scenario obviously can take us down much lower, but I still don't want to take the white count off the chart. It might just be an unusually deep wave 4, but it was absolutely still valid as a wave 4 in a diagonal. Because in diagonal patterns to the upside, yeah, like the C wave could be an ending diagonal, waves 4 and 1 are definitely allowed to overlap. That's the update about FET. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.